Welcome back. This is episode 5 of the Stablecoin podcast. I'm your host, Luther Madej, head of payments at the Algorand Foundation and co-founder of Stablecoin Partners.
And I'm Rami Solomon, president at GMO Trust and co-founder of Stablecoin Partners.
Today, we have the pleasure of talking to Raj Parekh, who led Portal and now drives stablecoin payments at the Monad Foundation. Raj's journey from Visa to powering embedded stablecoin rails is nothing short of transformative. Before we get started, a quick disclaimer. The views expressed here are those of the hosts and the guests and do not reflect their organizations. This podcast is for information purposes only and is not to be taken as legal, financial, or investment advice. With that, let's jump into it. Raj, welcome to the show, my friend.
Super excited to be here. This is going to be fun.
First of all, congratulations. Huge congratulations.
Thank you.
Yeah, I mean, as a fellow payments person myself, coming from the TradFi to the DeFi space, seeing somebody like you kind of make that transition and then seeing like a nice exit from Monad, and then for you to join Monad as the head of payments and stablecoins is huge, man. Like that shows a lot of transformative power both from Monad and for Portal. So before we jump into it, like let's get started from like the very beginning, man. Like you were with Visa, a well-known TradFi, large name when it comes to financial services. What was the transition like? Where did you get started? Like, how did you kind of go from being in the TradFi space to being slowly more into the founder of a startup like Portal?
Yeah, I mean, it kind of started. So my initial interest was actually always at the intersection of security and payments. That was always like what I was really interested in. So when I started at Visa, I was actually working with banks to help them think about breaches, exploits, hacks, and I was building a platform to help them solve for some of these issues. And then during that time of security and payments, I started to see this uptick of this thing called blockchain and Bitcoin. We were having, at the time, Visa had companies like Coinbase reached out to us. There's a Coinbase Visa card that was recently announced after. And so I kind of went down this rabbit hole and was like, I think what really dawned on me was open source systems that can move money globally. And, it was kind of a weird juxtaposition, but I was at Visa, I saw how Visa worked. It was, moved billions of dollars, every single day. And then I saw these open source ledgers that were also moving just as much value. And I was like, wait, this is fascinating. I can now move funds anywhere in the world in seconds. And it's all open source. And then I think, slowly afterwards, Visa started to get, a lot more internal excitement around this space. Myself and a few others, like Kai, started the Visa crypto team, and I was leading crypto products there globally. And then we started to unpack, what is the area that Visa can really play in? There's a lot of different parts of crypto, as you can imagine, just not really relevant for payments. But stablecoins made a ton of sense. But back then, it was just Tether. USDC was just getting started also. We were nowhere near the $200 billion in circulating supply. I still remember time showing the executives a chart for stablecoin circulating supply, and they would just laugh at me saying, "Wait, this is nothing." And it's just really funny to see where it's at today. And so slowly after launched stablecoin settlement, it was the first payment network to enable issuing banks and acquiring banks to settle in stablecoins. That was really exciting. But during that time when I was building it, it was really difficult. There was almost the infrastructure didn't really exist to build high performance stablecoin systems. And so we were just trying our very best to go get this thing out live. And so I think that's when the epiphany of Portal came about to say, okay, well, if money is now moving at the speed of the internet, it also needs complementary infrastructure to actually enable it as well. So that's what started the Portal journey. Fast forward to today, we, moved hundreds of millions of dollars. We worked with, a lot of amazing companies. And what we, I think the key insight is that blockchains on its own is really good and can do a lot of things. And, the open source nature, high transactions per second, but you need complementary tooling for around it. And so that's what we built at Portal. And so it's been an exciting journey, just seeing the inner workings and guts of a traditional company, but then kind of taking a leap into the stablecoin space. And it feels like there's a lot of room to run as well.
Yeah. I mean, one question one thing that's fascinating about your journey, Raj, in particular, is that A lot of people who are approaching this space from the crypto side are all saying we want to become the next Visa, create the new Visa. You are actually at Visa, so it's interesting to see your perspective and actually creating the stablecoin side. So you're going at it from a inside-out perspective, but it gives you actually a lot of visibility into the failings and what can be improved in the current system and how you've built out new solutions to integrate that. So I'm really keen to understand where you saw the gaps were within Visa's current infrastructure that led to yourself and Kai and the team building out the digital payments. Could you talk us through that a little bit?
Yeah, I mean, we're in the network effects business. I mean, and network effects, as you can imagine, is really, really difficult. And I think one thing that people don't realize is that Visa's been around for almost 50 plus years now, and so those network effects have been formed for many, many years at this point. And I think there's a lot of folks that have this ambition. I mean, of launching like the stable coin, the Visa for stable coins or whatever that might be. And I think the question comes down to like, how do you achieve network effects? And I think one thing that Visa did really well early on is that they created pathways and incentives for banks to say, hey, participate as part of this network. Here's like kind of the incentive that you can align, and that's where interchange, and it's very complex in terms of was it credit or debit, but the interchange kind of economic model really made a lot of sense for a lot of banks. It also kind of, I think the 0 to 1 moment was folks were taking like wads of cash to your grocery store to go buy goods and services, where you're like, dude, I don't want to carry around $300, $500 just to go make this purchase. And so you were back in the day, you're actually solving a real pain point of not having these stuffed wallets whenever you're going to a grocery store. I think those are some of the wedges that I think we need to now identify with stablecoins and just like the blockchain space, and then see how you can make it really approachable. The internet does create a lot of opportunity for network effects, but it's also creates more competition too. So I'm excited to see how this plays out, but there's no real clear winner. And I think everyone sees the opportunity in the next 1 or 2 years is going to be really telling, but it's a network effect business, and who can achieve that first is going to be the name of the game.
Yeah, absolutely. And I think, we had Edward Woodford on the podcast a couple of shows ago. He was saying we're on the cusp of a more fragmented world. There's going to be a lot more fragmentation in the stablecoin space, and interoperability is about where it's at. And I guess it's sort of going back to Portal and solutions like that, where how do you bridge those networks? Because everyone's sort of creating their walled gardens. How do you make sure that you can make them interoperable and then bring the liquidity to get that real network effect? I think that's going to be crucial over the next year or two.
Yeah, I mean, I think the way these trends tend to go is that these solutions get created, fragmentation gets created first. It's just much easier to have like a wall garden first, and then eventually gets consolidated again. So I think we're going to be on this this cycle of fragmentation and consolidation after, just to take even peel back what's underneath the hood for Visa. But there's a lot of these different debit processing networks. There's like Star Plus, there's Star, there's all these different rails that we're actually, behind the scenes, Visa's actually routing transactions over to. There's got to be I think 5 to 10 plus random, processing networks underneath Visa as well. So you could actually argue that same fragmentation existed beforehand, where, people saw this initial Visa network and started to build other networks around it, and then eventually consolidated where Visa was actually able to be interoperable across all these different networks also. So I think that's the cycle that we're in right now. Fragmentation is really helpful just to kind of prove out the North Star efficient way to do it. And then eventually people start to figure out ways to work and collaborate with each other as well. And so I think, unlike other technologies, payments just takes a very different arc altogether. It starts, even Visa's early days was a consortium. It was actually and you can kind of think of it as the governance network in the blockchain space, right? So you had these banks and these, this consortium kind of leading the charge of building out the framework for Visa, and then eventually kind of start to have it grow. That's exactly how blockchains work. It's just a governance, or a DAO or a foundation that's kind of built around it. So there's a lot of parallels to the arc of payments and how it's being translated over to crypto and stablecoins, which is really exciting as well.
I agree, man. I mean, you talk about fractionalized being how fractionalized in nature the various systems are. People, I think, often forget that even the US had like two or three different dollar bills floating around, right? You had a different dollar bill in one part of the country and a different dollar bill in a different part of the country. And almost every industry out there goes through this where new technology comes out. There's different broken pieces, and then eventually somebody has to kind of start come in and consolidating these things together. And I completely agree with you on that, Raj. If we kind of go back to what Portal was doing and the genesis of Portal, for people that maybe are not from directly from the space or maybe are more from the TradFi space listening to this, in a nutshell, how would you break down like the core building blocks of what Portal does, how it started, but more importantly, what it was doing in the ecosystem to kind of facilitate these millions of dollars of flows?
Yeah, I mean, I think at the high level premise was money's moving at the speed of the internet. How do we now make this available for institutions, enterprises, startups? But we also saw how, like, I think really janky the overall, I think crypto infrastructure space was. You have seed phrases when it comes to wallets. You have, all these different blockchains out there. So our goal was saying, hey, let's build the best in class embedded stablecoin developer platform where you can be a remittance company, you can be a bank, you can be an early stage startup, and the 0 to 1 moment where you can go from an on-chain transaction with stablecoins can happen in a matter of hours, minutes, or days. That was the goal. And a lot of our developers that we worked with were actually not crypto native at all. They didn't know what nodes are, or they don't know what block explorers are. They don't know all the random jargon that we've created in the crypto blockchain space. And so our goal was like, hey, how do we give this developer that aha moment where they can send this transaction 0 to 1 in seconds? And it's like one of the best experiences ever when you're like on a working session with a developer who's never seen crypto before, and they now have like transacted USDC for the first time on like maybe a certain blockchain. And they're like, oh, wow, I get this. Like, and I think that's the moment that we really strive for at Portal. And that tiny moment then leads to like full blown implementations, right? And so from there, we've had the fortunate opportunity to work with companies like Bitso, like PayPal, many different, I think stablecoin centric apps like Meru or Tokenos or some of these guys out there today. And so we're just it's been really fun just kind of seeing like what developers are doing with stablecoins. They all come at it with different angles. Some are just trying to solve for, I just want to make dollars available for my end users in Colombia, Argentina. Some are large enterprises that are saying, wait, we want to move money at the speed of the internet. We don't want to be beholden to this old system anymore, right? And so I think you're starting to see we were fortunate to see a lot of different exciting angles and how people approached it. And our goal is like, let's just like continue to lower the barrier to entry. And so that's what Portal was in a nutshell, like a developer platform that made it really simple for any company to build with stablecoins.
That's amazing. You talk about the traditional way to do a transaction, like, with an auth and settle versus, hey, everything just happens in one transaction, right? The auth and the settle and everything is kind of combined versus how normally transactions are done in the traditional, debit card or credit card world from that perspective. I think the other part is also the platform, but then can you talk about like the connections? Like you talked about the network effect, right? So I think one of the biggest plus points that Portal had was you had really good connections with the various players in the ecosystem. Can you kind of talk about like that network effect and how you kind of solve for that?
Yeah, I mean, I think one of the things that we did is realize, okay, like cool, like let's say a developer made a transaction from, in stablecoins. It's like, well, they probably need more pieces, right? Then you need like security tooling, right? You need some fraud risk tooling around it. You can't just put a transaction out there. There's likely some like risk or some security implications there, right? Then next, you may want to have interaction with the DeFi protocol. Maybe you want to earn yield on that stablecoin. Maybe you want to conduct a swap. Maybe you want to add like a trading component to it as well, right? So we realized that, okay, that 0 to 1 moment for making that transaction, fantastic. But now you need more pieces afterwards. Maybe you need on and off ramps, right? Maybe your users want to go from fiat to crypto. And so what we realized is that what we're really building at Portal was like almost a full-blown app store where it's like, let's let's kind of get the initial pieces, the foundation in place, create your account, send a transaction. But then let's also like make it super simple for when you want to go from 1 to 100, how can we like continue to lower that barrier to entry for you? And sometimes that might be, interacting with the DeFi protocol, that might be working with a, RPC or node provider, that might be providing, some type of policy engine so that, our customers can create their own rules also. And so it just created a lot of different building blocks. So I think of it as, we are providing all the different pieces there, and then our customers can kind of pick and choose their own adventure based on like the use case and how applicable it was for them. But we want to make sure that, we are like a one-stop shop at that point where any development needs, like we're able to provide that for you too.
I have a question for you with that, Raj. In terms of when you were talking to financial institutions, so obviously one of the benefits of a Visa is that a merchant can freeze, can charge back. If there's an issue, you can come back and do that. With the finality of stablecoins, that's not possible. So how did you solve that for them, or what's the approach? Are we at the right stage of finding a solution to this problem, or how did you approach it with those financial institutions who wanted that kind of similar experience?
Yeah, I think it really just comes down to use case, right? I mean, the payment space is so massive. So you have like remittances, you have B2B cross border, you have the card transactions that you're alluding to as well. I think you're starting to see like some early glimpses of auth plus settlement systems, what Coinbase and Base and Shopify have done, right? There's some early, resemblance to like the Visa auth system today. But, when you think of like FedNow or Swift or some of these types of payment rails, there's actually finality built into it, right? There's, so you start to, I think the parallel between stablecoin blockchain transactions to like a cross-border transfer or even a domestic real-time payment system like FedNow, that finality actually exists. So I think it's about, I think there's still like early days on like the card side. And, what I've seen in more of an uptick on is some of these stablecoin neobanks actually like adding Visa cards into the mix, right? With, with folks like Rain and, our friend Farouk. And so actually leveraging like the auth systems of Visa, but then using stablecoins as the settlement layer for more efficiency. So we're starting to see that like melding of two worlds. And then on the remittance side, you're like, these guys are saying, cool, let's just, instead of routing to like our payout corridor partner, we can just use stablecoin rails and maybe have it all like manifest in dollars. So I think it's really just about, breaking down the use case, but some of the finality components is actually beneficial. And there's still like, I think overall a lot of work to do on like creating a better auth system. But who knows, maybe it's actually just Visa that powers all of it as well. So maybe it is like a collaboration of the traditional world and the stablecoin world that actually might be the move.
Yeah, indeed. It's fascinating to see how it's going to play out. I mean, it's not disruption, it's sort of convergence. That's what you see. It looks like this seems to be the route it's going to be taking. It's original network, new product within the same network. I think that seems to be the way that it's playing out. But, I don't know. I don't have candles to the future at the moment.
I wish we did, man. I wish we did. One of the things is, interoperability, right? Like, so the biggest thing is like Visa has built, MasterCard has built, is the fact that you can walk into any store that you see a sticker on and know that you can use your card. Like that person doesn't need to trust you. They just need to trust the little logo on the card. You don't need to trust the shopkeeper. You just trust the fact that because, everything flows properly, that person is getting paid and your goods are received, right? I think that part is like the biggest factor that some of these, and that's why they used to be called trust networks, right? I mean, like they were called trusted networks for that reason, because what the biggest thing that they had, Visa and MasterCard and Amex and Discover, was like they were a source of trust for the merchant and the customer from that perspective. And I think that you're right. Like the combination of like stable coins or just digital assets and the traditional rails is really, I think, what's going to gear the massive adoption that I think we're all looking for. Just kind of changing gears, Raj, we've talked about what Portal is, and when you look at Monad, which I'm super amazed, like 10,000 TPS, this is exactly the same TPS that Algorand has, which is that I think what we're starting to notice is that there's a lot of chains that are going for and successfully doing fast transactions cheap, right? And that's kind of where we're going. So what was the impetus, or what was the thinking that you think Monad had when they looked at Portal and said, we've got the tech stack from a blockchain perspective. This is what Portal solves for us. What is that that you think Monad saw that in Portal that kind of answered the question for them?
Yeah, I mean, I think for me, first off, I think what is Monad? Monad is an L1 blockchain, EVM compatible, 10,000 transactions per second. I think the team behind Monad Category Labs has been building everything from the ground up for the last 3 years or so. I think what it really started off is I think the overall collaboration here was a set of organic conversations. The Monad team realized that, hey, with 10,000 transactions per second and all the different attributes that the blockchain has, payments and stablecoins is actually a very natural evolution of what it could become. And for me, I think I've after working with a lot of developers, and sometimes I even get questions from non-crypto native developers to be like, hey, which blockchain should I build on? And it was always a really hard discussion and conversation for me to have, because as Portal, we were always focused on being chain agnostic and neutral. And so I would have to unpack this a little bit more to be like, what are you looking for? And it just leads to a lot of dead ends, and you're almost creating a lot of cognitive overload for just a developer who's like, dude, I just want to move money on chain. I don't know what, I don't want to break down this decision point. And I think for me, the area that was really interesting about Monad is that it's actually EVM compatible, which made it really simple for infrastructure companies, for apps, for a lot of folks to say, hey, you can just switch chains and you can use the full power of Monad. And I think underneath the hood, I basically view it as endgame EVM architecture. And there are not a lot of I think in order to have we've known EVM historically has had a lot of bottlenecks, but then to be able to scale that, it now has the opportunity to become the internet settlement layer, which I think I'm really excited about. And I think on the Portal side, what the Monad Foundation team saw was you need a lot of complementary tools to actually build with blockchains. I can't just go to an institution or someone say, hey, go use my blockchain. It's where do I start? You need tools and services to actually make it available. And I think there's two paths. Either you have the infrastructure and the ecosystem kind of help support you, or you can actually have some of that tooling to say, let me de-risk and lower that barrier to entry for you pretty quickly. So I think it's about really being complementary to each other. Portal's still chain agnostic. We don't want to be prescriptive on the types of chains that folks want to use. If they're like, hey, we really want to use Algorand or Solana or something along those lines, we absolutely want to support that, because our goal is we want to grow the pie here. The pie is we know where it's where it's been, and we want to make this bigger. And at the same time, if we can now lower the barrier to entry for using the Monad blockchain, I think that's also really helpful too. So that's what that combination looks like. I think lots of room to run. I think there's a lot of the space is only expanding a lot faster. In the next 1 or 2 years is going to be really telling. So still a lot of work to do, but it's a really exciting combination.
You're spot on the fact that I think a lot of times I've said this before when people say, where do I get started? And it's not just getting your Circle Mint account. There's 1,000 steps beyond just getting access to USDC. And I love what you touched on, which is ultimately the end user, in this case a developer, whether it's somebody who's just building a small little startup or somebody who works for a large financial institution, they just want to achieve the function and have ideally a one-stop shop where they come and say, right, hey, I can use this platform and it has everything that I need, soup to nuts, for the most part. There may be a couple of things that maybe some sub or something that you need to kind of go sign up for, which is outside of the ecosystem for AML, KYC, etc. But in general, it has most of the building blocks to get you from A to at least A to X, maybe, right? And then you need to kind of do a little bit more to get to Z. I completely agree. I think that's one of the biggest things that traditional financial services, if you go to a traditional gateway company of some sort, you get everything. I think that's the gap in between in digital assets today, where people, when they want to build, they're like, okay, now I need to go learn so much more than I ever had to before, and all this new nomenclature, etc., and all these new companies that I never heard of, right? Like, so I see that's, I think that's the big challenge that we need to all solve for, and ultimately, to your point, all these assets need to kind of flow between blockchains and various ecosystems as seamlessly as possible. Really, that's the only way I think we get true adoption.
Yeah, and I think of it as a couple of different levels. I mean, the user, I mean, today they probably don't even know how Visa works today. They
Yeah,
go to the
and they
merchant
shouldn't,
and
right?
exactly, and they shouldn't care like how it works. They should just assume like I swipe my card, transactions completed, and the merchant has received their payment. I've made the payment. That's basically it. And when you talk to a developer, the next level up, they're just like, let me just build, like I've got this directive from my product manager or my executive to be like, I need to go build this remittance app. They're not going to spend time unpacking what a blockchain or consensus mechanism works. It shouldn't really matter. And I think historically over the last, year or two, we've kind of forced, the space to say, hey, cobble together like 4 or 5 different vendors. And I think that's kind of been like the space. I think what you guys are doing as stablecoin partners, to plug you guys for a second, is going to be super helpful, because now you guys can take this fragmentation and all the different parts of the stack and say, hey, like, can we now like make this, how do we simplify this for you, and really just get cut through the noise and to get to the right parts that make a lot of sense. And I think we still have a lot of room to run before like the infrastructure really gets melded together. But in that time period, it's going to be like folks like yourself and what you're doing, and then also just what we're doing at the Monad Foundation and Portal to really just like simplify the overall stack. And so that's, I think, what I'm excited for, and I think that's the next level of maturity for us as an ecosystem too.
I appreciate the plug. Absolutely.
Yeah, definitely echo that. And I would say, just from the perspective of a stablecoin issue with my day job hat on, it's complex and it's resource heavy and it's regulatory heavy to go from one blockchain to another, to do multiple blockchains, to issue a stablecoin on different blockchains. So having one that is EVM compatible actually makes it a lot easier for it to be interoperability between stablecoins. So it's much more fluid and arguably easier to scale from that perspective, like going with an EVM.
Yeah, I mean, and I think the one thing I'll add to that is basically, over the last like few years, it was just impossible to scale the EVM. And that's why, like, I think Algorand and like other projects have come up and said like, hey, we can really do this effectively. I think now is an opportunity, hopefully, that we can see the world see mature, newer architectures. I joke, it's like, people are using iPhone 8s and iPhone 10s before. Like, now we should show them what like iPhone 16s look like. So I'm excited for like newer architectures like Algorand, like Monad, and others to kind of really showcase like what's possible too.
Absolutely. Quick segue. I think I want to actually get both Rami, your thoughts, and Raj, your thoughts on this. Okay, so stablecoin issuers like Circle launching their own blockchain, right? Like, I mean, this is, I didn't see this coming, to be honest with you. Like, I really thought it would just be a case of like more like them issuing on more and more chains. I mean, I think somebody told me there's close to 300 blockchains out there, but for them to launch their own blockchain, like, Raj, what are your thoughts on this? And Rami, as an issuer, I definitely would need to get your thoughts next.
Yeah, I mean, I think at the base level, I think blockchains have been amazing distribution partners for USDC, right? I think it's every blockchain's incentivized to drive more volume and circulating supply, and so just having Circle having many blockchain partners, Monad's also live with USDC also. So I think from like that 0 to 1 journey that USDC went on made a ton of sense. I think now as Circle as a publicly traded company, there's the incentives and like the quarterly reports and earnings get really real pretty fast, and then also pigeonholing yourself with a single really large source of revenue becomes tricky. You're basically at the mercy of the Federal Reserve and changing interest rates, and that determines like your quarterly earnings. So I think there's like multiple different dimensions for Circle strategy here from what I can see from the outside. It's like, one, diversifying their revenue. Two, I think it's owning more of the network effects, where it may not just be stable coins, right? It could be like tokenization. It could be other ways that other assets that start to flow into their own blockchain, and they can start to then enable that even further. So I think it's both a defensive and offensive play for Circle for the period of time. And now that they're a publicly traded company, narratives and these type of stories do matter quite a bit. And so it can help, I think you're now managing, like, similar to token prices, you're now managing your stock price publicly. So that creates, new things for them to think through as well.
Yeah, look, I echo that. I think from my perspective, when I saw it first, I thought that's revenue diversification. We're in a different part of the interest rate cycle now. It's downwards, not upwards. So that has a big impact. And with Circle, it's extremely visible with them being a public company. So, they can see the impact it has on the bottom line, and with all of the sort of rewards and, a percentage of their income that gets paid to partners, you need to look at a different revenue source to keep yourself at the stock price that you want to be at. So I think that makes sense. And you want to own more of the chain, or own more of the value chain, if you can get people interacting with you. And also, I guess it's also an independence from failure of particular blockchains. Ultimately, if certain blockchains are focused on other things, NFT, meme coins, all the rest of it, in time, as these things scale, they can be clogged up. And then suddenly that can have a meaningful impact on someone trying to move a decent amount of Circle on that particular blockchain. So if you're in control of your own blockchain, not only are you getting a revenue stream from all of the validation and all the other stuff from just owning it, but you're securitizing, or you're securing the reliability of the performance and the performant nature of the distribution of your assets. So I think it's, as Raj says, it's offensive and it's defensive, and I think it's we're going to see more of that. I mean, it's in the same week that we saw, like, them, Stripe. Lots of people are trying to think about how to issue their own L1s. I guess the confusing thing for me was that because of the sort of symbiotic nature, or at least close relationship between Coinbase and Circle, why wouldn't they have built a more deeper relationship with Base, for example, rather than spin out their own one? That's the bit I didn't really understand. But maybe, Raj, you're closer to the Valley, and what was the thought process there?
Yeah, I mean, what I can see is that, I think Base has its own roadmap, has its own strategy, right? And, I think Coinbase is going to march to their own, drumbeat. Circle, depending on their priorities, they're going to have to own a lot of that. And it's always going to be tricky, to say, hey, like, you talk to your brother and you say, hey, can you go build this for me? Or can you do this for me? Or can we do these things together on Base? When, they have that, they have their own little, path that they're marching towards. And so I think this is a way that Circle can, continue to maintain control. They have their revenue split that they're really happy with already today. And so at the same time, like, the beauty of, our space is truly permissionless, right? You can kind of do what you want. And so I think it's important for Circle to continue to approach it that way too.
Yeah.
That makes sense. Also in today's world where, the prevalence of higher gas fees is kind of going away, right? Like, you see more chains that are really tackling this, like I said earlier, like the high speed, low fee. Like that's where I think I missed. I was like, it's not like having higher gas fees as a revenue source is going to be optimal. Like, nobody's going to come build on that chain, right? Like, they're going to be like, I'll just go to a chain where it's, sub penny, right? Fractions of a penny, in the case of like Stellar or Algorand, for example, right? So I was kind of trying to figure that out in my head, like what was the impetus to kind of go build their own chain. But I think time will tell. Stripe was definitely a big surprise, Rami, like as you mentioned, from that perspective. I think it's increasingly obvious that these larger financial institutions are going to probably go that route. Now, I think one of the things that I'm a strong believer in is that anybody that holds funds, right, of some sort as part of their treasury, whether it's for themselves or etc., they should have their own stablecoin or some kind of tokenized treasury aspect to it, which is, I think, something that we talked about with Braille. We had Ben Milne on here. Would love your thoughts, Raj, on, like, I think anybody that holds funds should have their own stablecoin, because I think they're missing out. Would you agree with that?
Yeah, I mean, I think it really depends on, like, their strategy and their use case, right? But I think in some capacity, if you're like a large company like Stripe, you have a massive distribution. It might make sense to say, cool, we're going to have everything flow in Stripe dollars, right? And continue to own the interest, have that grow based on our own ecosystem. And if you're a bank, you might say, a tokenized deposit might make a lot more sense because maybe you need to move money between different, entities across different markets, right? Or maybe, another area for a bank could be, I want to expand my correspondent banking network. Today, JP Morgan is, they have like probably the largest correspondent banking network in the world. But if you're a, tier 2, tier 3 bank, right? You're maybe, you're very specific, you're focused on a very specific region. Having, establishing bespoke correspondent banking relationships across all these different markets takes a lot of time when you have a smaller team, less resources. But if you can say, hey, I can use like tokenized deposits or stablecoins to now accelerate my correspondent banking network, instead of having to go through all these intermediaries, I can offer my customers T+0 or T+1 transfer times. That starts to become really interesting also. And I think it just also, it's, I think every bank has its own, strategy and wedge. Some are really focused on lending. And so in that case, like, do you want to lend, 10 times on tokenized deposits versus like your existing system? That may or may not make sense, right? Depending on what you're trying to shoot for. So I think those are some of the things that it's like worth unpacking when working with a bank or a company. But distribution, your use case, and then from there, there's a lot of different cool angles that you could take with tokenized deposits and stablecoins also.
Yeah. I think it really depends on where your moat is and where you're coming from. If you've got a monopoly on issuance, actually a monopoly on issuance lasts less and is less strong than a monopoly on distribution or a stronger moat on distribution. Hence, I think if you're a Stripe or you're a Visa or you're a bank, it's easier for you to think about issuing your own stablecoin because you've already got real day one network effect, Whereas if you're Circle or USDT and you're coming at it from the other side, you've got an initial monopoly on issuance of a new asset, but you still need to pay for the distribution. You don't have that distribution. And at the same time now, it's getting more fragmented, as we talked about earlier. There's multiple different players coming in. That's a harder nut to crack. So I can see the rationale why someone like Circle would think about different ways to deepen the moat to make things more sticky to their particular asset. Because, as Raj said, a lot of people may actually think that tokenized deposits are actually the better way, the better stable coin. Maybe using JPMD. Circle doesn't have a seat at that table. It's not going to be issued unless it applies to be a bank, which it has done. But, there's lots of other stuff going on. Right. So it's really, really fascinating how it's going to develop. Like, I feel like we're at this crux point between the crypto innovators and the crypto OGs, the crypto native companies, and those the incumbents. And the incumbents have a really, really big head start in terms of network effect. So it's sort of, will we see the crypto guys be eaten, or will the crypto guys actually innovate enough to partner or to win themselves? Really fascinated to see how that's going to play out.
I agree. Going back to Monad and Portal, Raj, if I were a builder, like what kind of categories, what kind of verticals would I be in that makes the most sense for me to immediately kind of come and look at Portal on Monad? From a remittance perspective, like large institutions, small institutions, banking, like maybe you can kind of tease that out so that if I'm listening to this, I can be like, I need to kind of call Raj immediately.
Yeah, I mean, I think first off, Monad is a general purpose blockchain. So, we have like really exciting, DeFi projects like Kuru and Purple that are, when you have like high, 10,000 TPS, you could start to really mimic like high frequency trading on blockchains, which is kind of exciting. So we have, central limit order books that are fully on chain, right? Which I think is exciting. And trading and the DeFi world, and I'm spending a little bit of time here to talk about it for a second because it's important, is actually a way to drive volume and circulating supply. That's what we've seen in the traditional space too, right? I mean, you have the FX markets, you have commodities, you have equities. These are all, massive markets that we have in this world. And what it does, it creates volume, it creates circulating supply. And then from there, kind of payments kind of trickle afterwards. Once you have the supply, then you can actually move money, right? And so I spent a little bit of time talking about DeFi in the trading world because, as much as, we like to create that as a separate use case, it's actually very complementary. And so, I think the Monad ecosystem has been able to innovate on that front quite a bit when you have these high throughput systems, so we can start to mimic, what HFT and those sorts of systems can kind of look like on chain. And then from there, I think, we're able to offer the like the stablecoin payment side, where we have like USDC, we have a ton of other stablecoins that are going live fairly soon as well. And then you have the complementary infrastructure to go build on it too. So I think our goal, like we've talked about before, is most folks shouldn't really care about the underlying building blocks. We're now packaging everything up nicely for you to go from 0 to 1 quickly, and then you can do it in hopefully the best in class systems across multiple fronts, from both the developer tooling side and the blockchain side. And so I think as a builder, like, one, general purpose, and so feel free to come, and we've got like a lot of different exciting apps that are already building on Monad, even pre-launch, which is really exciting. And then you can kind of see the stablecoin payment side becoming a very obvious like next step, for folks to think through. And so I think that's a combination that we're really excited about.
I'm glad you spoke about that, because that sort of speaks to sort of my TradFi background in brokerage, and actually something that Ed was talking about a couple of podcast shows ago. Stablecoins, obviously, within brokerage, has found a really good use case in terms of a real-time funding instrument with no chargeback. That's the reason why stablecoins are doing really well. But yeah, you flip it. Actually, why do you need the stablecoin to fund? If you're able to give 24/7 trading, and you're seeing that transition with things like Robinhood trying to do tokenized equities 24/7, and that sort of nature of other asset classes going on chain, on a DeFi venue that Monad can produce the same results as a NASDAQ, to do stock trading effectively on chain. Of course, the interplay between stablecoins and those venues not only is sort of a virtuous circle for the volume, and that's very, very exciting to see how that plays out. I'll have to look at Monad a bit more, actually.
I like what you said, Raj, which is true, right? Like when you look at like I think the volume number was like 7 trillion for stablecoin volume, and people are like, oh, it's clearly larger than Visa and MasterCard, but like the fact of the nature is that most of that volume is coming from trading and not so much from payments, right? So it is, you're absolutely right. I think people need to pay attention to that when they truly look at where are these numbers really coming from that perspective. This is awesome. Raj, like, where can people find you, my friend?
Yeah, I mean, I think first off, if you want to learn more about Monad.xyz. If you want to get to know, find me on Twitter on Raj Parekh _. And then also you can learn more about portalhq.io. So multiple different areas.
I love that. Once again, congratulations. This is fantastic. I think the next time we have you on, Raj, I'd love to get your thoughts on agentic payments and these faster ones.
We can unpack that a lot. I think, happy to do a round 2, and we can unpack that further. I've been spending more time than I want to vibe coding on the site, so I have a lot of ideas there.
Absolutely. Well, thank you so much, Raj. For everyone else, please like and subscribe. We're on every other week.